Hello, hi guys. Okay, so this week uh, market view will start with the indexes. So first, let's look into the some of the index that was opened today. So if you go to I think I can search here. Okay, so the Middle East two stock market opens there, and they seems to have closed today's market with slightly negative, with the negative Q only, and same goes for both the indexes actually. So we'll start with our indexes with the Nifty, and I'll start with a weekly chart of Nifty. So many many of you already have seen this chart probably. I mean, this is much more like popular previous 52-week high, previous 52-week low, and so if you look into that, there has been extension of the Fibonacci, and first 1.414 Fibonacci extension, it found some rejections and did a correction, and then again able to recover and made a fresh higher high. But near 1.618 extension, again it found a rejection and price is coming down. But this time the global Q is also negative. So the special reason is the US bond market yield suddenly increased, and then it panicked the investors for US market as well as the global market. And bond market directly related to the financial market as well. So bank and finance are likely to be much more under the pressure than the other sectors. So the bond market related issue like yield rising happened around 2013. So approximately around this segment of this chart, you can see this small correction happened around the same time where bond related issue came. So the thing is that time prices corrected approximately 20%, but that doesn't mean this time also price will correct 20%, but that's just another information that has happened before. Now strictly speaking, technically, if you see here that price has been made rejection earlier in this zone, so whichever price is coming down here, so price is supposed to take support. So this low is where price is supposed to take support and try to bounce back. If unable to take the support here, that will mean that that will basically panic the guys whoever bought the bottom, who are buying the bottom for each dips. Everyone, there are some investors who are buying all the bottoms and pushing the price higher. So breaking this low will mean it will panic those investors, and that may trigger a bigger profit booking. So that's what the expectation, psychological expectation, and based on the chart structure, that is what expectation is. And one more thing, if you notice that there has been significantly lower low in 2 weeks, 2 candle. So this is something that has not happened before since the September. So since the October, November, December, every time there has been price has been fallen any significantly, and next week itself price has bounced back. But this is the first time where 2 candle formed a significant lower low. Now coming to the FII derivatives data, also I have shown that you guys that there has been significant decrease in the future open interest that they have been carrying since the October. So the future Y was high since the October, like the starting of the US election. Those long future Y has been significantly come down in this last 2 weeks majorly. So that is another concern factor for the bulls. Now looking into this, I'll just switch back to the daily chart and see much closely what are the levels that we should be looking at. So this previous week low was the first level where it's supposed to take support. Even for initially Monday, if it just breaks the low and makes a lower low, it need to immediately find the support, and in Monday itself price need to bounce back. If unable to do that, that will mean the intensified selling pressure, which will mean initially to coming back to the 14k, and even it can further down to the 13.5k approximately here. Okay, so this is the two level which are below the current level around. So if price unable to take immediate support on Monday itself, then we can expect that kind of bigger sell off and bigger profit booking sessions. So that goes for Nifty. And now going for the bank Nifty, and just like I told you, the bond market and is directly related to lending, and those interest rates directly impact the financial and bank stocks. So that's why I told you guys to right now try to stay off the banks and financial for a while, and let the price find the bottom and start bouncing back, and then go for the buying from the bottom. So right now if you see, this candle had made a little lower low, and irrespective to the previous lower low, which was able to support for like 3 continuous weeks, but last week price has been broken below that, slightly below that, not very weak. So which means again, so same thing as Nifty, if Monday price is able to take support immediately after the opening or throughout the day, it doesn't make any lower low from here, price will likely to try to bounce back. But unable to do so, in case price unable to do so, what will happen, the sell off will intensify, and in this case if you see, there is no big support here because price rally has been very sharp. The support that I can see, which is coming slightly around 33k, which was around previous 52-week high. So 33,000 is the major support. If you see that price start falling big, that means the support is kindly a little bit very low. So that's why the bank Nifty, which is much more vulnerable at that point because of the technical as well as the fundamental reason of the bond market. Okay, now so 2 indexes I covered. Apart from that, if we look into the commodities a little bit, the crude oil, if you look at it, so it has found resistance around the multi-year supply zone. If you notice that around 62 high price never able to sustain, okay, since 2015, and price found resistance. And if you coming back to the recent 2 weeks, if you see that both of the 2 candles is taking resistance around the same level. So if price is unable to give a breakout, which means it likely to fall down, start falling down again, or might go sideways around here. So that's a possibility expectation from the crude oil. And going to the gold price, if you see that it has been following a falling trend line, and it made a fresh lower low, breaking the previous low. So this signifies that's a bearish trend, and as long as this upper trend line is protected and price doesn't break out above this, which means this bearish run of the gold may continue further down. So this is what the expectation is. And now if I go to the now let's go to the global market. Let's check the Dow Jones Industrial Average. If you see here, the RSI has been making same top here, and the price is making higher top. So there has been bearish divergence has been formed, and if you see, there's a rejection which broken down below previous high, and this is clear breakdown signal, and price is likely to come back to this. So the chart structure is suggesting that price may come down towards this level. Okay, now other than that, overall, as long as the global market is negative, we are expecting the fallout may continue early next week as well. Okay, so right now let's wait for the bottom out, and then we can start buying here. So that is all for this week's market view. Thank you.